Harley-Davidson Inc. reported its fourth quarter 2024 financial results, with consolidated revenue declining by 34.7% to $687.
Dealership lots are packed with bikes no one wants. Prices are crashing. Riders are walking away. Harley's so-called premium dream is starting to rust under the weight of years of hype, overpriced machines, and brutal financing deals. What was once a roaring market is now choking on its own greed, and the fallout is just getting started. So the real question is, how much worse can this crash get? For years, motorcycle dealerships, especially the ones selling Harleys, built an illusion so strong, so carefully designed that even the most seasoned riders fell for it. It wasn't just about selling bikes. It was about selling a lifestyle, an identity. These dealerships knew that if they could make people feel like they were buying into something bigger than just two wheels and an engine, they could charge just about anything. And they did. The Harley name in particular became more than just a brand. It turned into a symbol of rebellion, of rugged individualism, of American grit. The marketing was emotional, nostalgic, even romantic. Every ad, every showroom visit, every test ride was about freedom, heritage, and being part of a legacy. They didn't need to explain the price because they weren't selling a bike. They were selling a dream. And people bought into it, literally. They handed over tens of thousands of dollars, often far more than the bike was worth on paper, because they thought they were getting something rare, something that would hold its value, something that said something about them. But behind that dream, behind the polished chrome and roaring engines, was a business model that depended on manipulation. Price markups were just the start. Some dealers added mysterious assembly fees, documentation charges, and freight costs that were way above industry standard. And then came the loans.
Harley's, along with 200,000 people a year, is the sound, feel, and style.
That's where it got really dangerous. Instead of cutting prices when buyers hesitated, many dealers just stretched the loans. 5-year terms turned into 6 or 7. Interest rates soared, and many riders didn't even know what they were really signing. Some even ended up paying nearly double the bike's actual value once the loan was fully paid off. And if they tried to get out early, huge penalties. Upside-down loans. Trapped. You might think, well, people should have read the fine print. Sure, but it's not always that simple. The emotional pitch was strong. For a lot of people, buying a Harley wasn't a numbers game. It was a bucket list moment, a lifelong goal. And the dealerships knew it. They weren't just selling motorcycles, they were exploiting dreams. But in 2025, the curtain's finally falling. Buyers are waking up. The same bike that was $28,000 last year is now sitting in the showroom gathering dust, even with discounts. Riders are talking to each other. Forums, YouTube channels, and social media groups are flooded with stories about buyers' remorse, unaffordable payments, and the realization that they were sold something that wasn't worth what they paid. The trust is breaking. And once that trust is gone, it's almost impossible to get it back. Buying a motorcycle used to be simple. You walked into a dealership, picked a bike you liked, maybe got a short loan, and rode off with the wind in your face. But over the last few years, that simple idea got hijacked by a mountain of complicated, often predatory financing tricks. Harley dealerships in particular leaned hard into this. They knew they couldn't keep raising prices forever unless they found a way to make those insane numbers look affordable.
First things first, you've identified the motorcycle you would like to trade your bike for. Depending on the amount of time that you've had your loan for, the amount of money that you put down, and of course, your motorcycle's current value will determine if you're either in a positive or negative equity.
So they started stretching out the loans. 5 years, 6 years, sometimes even 7. At first glance, the monthly payment didn't seem so bad. That was the hook. A customer walks in expecting to pay a few $100 a month, and the dealer makes it happen by stretching the payments thin. But what most buyers didn't realize was how much they'd actually be paying in the long run. Hidden fees, service contracts, sky-high interest rates, balloon payments waiting at the end like a financial landmine.
And I can at least call him out for wasting my time for not disclosing these issues, in a nice way, of course, then he may have been more inclined to drop the price. As always, lots of lessons to...
And then there's the killer part. The bike starts losing value the second it rolls off the lot. Fast forward a year or two, and many owners find themselves underwater. They owe more on the loan than the bike is even worth. Try selling it or trading it in, and you'll hit a wall. The dealership will offer you a number so low it feels insulting, but it's based on cold market reality. Your investment is suddenly a burden, and the freedom you thought you bought starts to feel like a trap. This isn't just happening to a few unlucky riders. It's a widespread problem. The financing game helped Harley and other big-name dealers create the illusion of strong demand. People weren't really buying because they could afford to. They were buying because the loans made it look like they could afford to. It kept prices high and inventory moving. At least for a while, but the truth is the whole system was built on shaky ground.
I got them approved at 4% interest rate. I'm like, awesome. Hey, we got you approved at 6% interest rate, or 7% interest rate, or 5%, or 4.5%, or whatever. The difference in percentage points, I keep. The bank pays me for those differences.
And now it's all starting to crack. Interest rates are higher. Inflation has made people more cautious. Wages haven't kept up. A lot of riders are waking up to the fact that they've been sold a dream they can't really afford to maintain. They're stuck making payments on bikes they don't love anymore, or can't ride as often as they'd like. Some are even trying to walk away from the loans completely. Dealerships, meanwhile, are sitting on inventory they can't move. Bikes are collecting dust. The market is cooling fast, and there's no bailout coming. The financing tricks that worked for years are backfiring. Buyers are more educated now. They're asking questions, reading the fine print, and realizing the price of freedom might have been way too high.
It's very difficult for me to make this a priority. I haven't gotten it sold yet. And so, how do you want to proceed? And he told me, he's like, hey, I get it. No worries. Just keep posting it, do what you can. And if we can get rid of it, we can get rid of it. So
dealerships used to count on bikes flying off the showroom floor. For years, they'd place massive orders with brands like Harley Davidson, assuming that demand would always be there. After all, the hype was strong, the marketing was slick, and the financing tricks made expensive bikes seem affordable. But now, all of that confidence has turned into a nightmare, and it's sitting right there in their showrooms, collecting dust. Walk into some dealerships today, and you'll see rows of brand new motorcycles lined up like they're ready for a parade that never showed up. These bikes aren't selling, and the reason is pretty simple. Buyers are burned out. The inflated prices, the shady loan terms, the hidden fees, it's all caught up with the industry. People aren't walking in with wide eyes and open wallets anymore. They're walking in with questions, skepticism, and in many cases, no intention to buy at all. The problem isn't just consumer fatigue, it's the massive overproduction that happened when the market was booming. Harley and other brands got cocky. They pushed out too many units, thinking the party would never end. But when reality hit and demand dropped, those bikes didn't disappear, they just piled up. Now dealers are sitting on a mountain of inventory that costs them money every single day it doesn't move. To make things worse, the used bike market is exploding. Riders who bought overpriced motorcycles a few years ago are now trying to get out from under their loans. They're selling their bikes for whatever they can get, often taking a loss. That's flooded the market with lightly used bikes that cost way less than a brand new model, and still have plenty of life left in them. So why would someone pay top dollar for a new Harley when they can grab a nearly new one for thousands less? This shift is undercutting dealers in a big way. Not only are they unable to sell the new bikes they've already bought from manufacturers, but they're also being forced to compete with private sellers who don't have overhead, don't charge fees, and aren't trying to make a profit. Buyers are getting smarter, and they're not falling for the showroom pitch anymore. For many dealers, this has created a vicious cycle. They can't move the bikes, but they still owe the manufacturers, so they offer bigger discounts, deeper financing deals, or expensive add-on packages to try to pad the margins. But even those tactics aren't working like they used to. People see through the gimmicks now. The trust is broken. You can feel the shift. For years, motorcycle buyers walked into dealerships trusting what they were told. They believed the sales pitch, took the financing deals at face value, and paid those eye-watering prices thinking they were getting something special. Not anymore. That blind trust is gone. Today's buyers are sharper, more cautious, and way more informed. And they're fighting back in ways the industry didn't see coming.
Normally you couldn't buy a warranty for it. With them, if you buy a bike privately, or if you just currently own your bike and you want to put a warranty on it now, maybe you have some big trips ahead of you, you can jump on their website, take a picture of your odometer, give them your VIN number, give them some information, and you can buy a warranty right there to cover your motorcycle.
One of the biggest changes is how people shop. Instead of heading straight to a dealership, many are going online first. Platforms like CycleTrader, Facebook Marketplace, Craigslist, and other resale sites are booming. Riders are looking for deals from private sellers. They want fair prices, full transparency, and no pressure. The old dealership game of upselling extras and slipping in hidden fees just doesn't fly anymore. Even first-time buyers are doing their homework. They're reading reviews, watching YouTube breakdowns of financing scams, and talking to other riders. Forums are packed with people warning each other about shady contracts and overpriced models. You'll see posts like, "Walked away from the dealership today, $5K in add-ons I didn't ask for," or "Tried to trade in my bike and they lowballed me by thousands." These aren't rare cases, they're everywhere. The truth is, people are tired of being treated like they don't know better. The dream of motorcycle ownership is still alive, but consumers want it on their terms. They're asking the right questions. What's the real interest rate? Is this markup justified? Why does the same bike cost less online from a private seller? That kind of awareness changes everything. And when dealerships don't play fair, buyers walk. That's a big deal. In the past, someone might have accepted a bad offer just to ride out of the lot on a shiny new Harley, but now people are standing up and saying, "No thanks." In some cases, they're even walking away mid-deal when they spot something shady. That's powerful. It sends a message that manipulation and inflated pricing won't work anymore.
The best possible option. Save up for cash. If you had enough money that over the next 2 years you're going to pay this bike off with interest, then you could just, in theory, wait 2 years and buy the bike with cash.
This revolt isn't just about saving money, it's about control. For a long time, the dealerships held all the power. They controlled the narrative, the financing, and the options. But that's flipped. Buyers are done being taken for granted. And the dealerships that don't adjust, they're the ones stuck with stale inventory, bad reputations, and fewer customers. You can already see which shops are getting it. Some are ditching the old tactics and focusing on honest pricing. They're being upfront about fees, offering better loan terms, and even helping buyers compare used options. Those are the places that will survive this shakeup. The crash in the motorcycle market isn't just hitting buyers and dealers, it's shaking the entire industry. The impact goes far beyond showroom floors. Behind the scenes, factories are slowing down, layoffs are happening, and longtime dealerships are shutting their doors. What started as a pricing problem and financing bubble is now spiraling into something much bigger.
American businesses, large and small alike, are adjusting to the Trump administration trade war with China. Mattel, the maker of Barbies, says it will raise prices where necessary and shift supply chains out of China.
Harley-Davidson, which once stood tall as the symbol of American motorcycling, is taking a major hit. Years of inflating prices, relying on legacy branding, and ignoring buyer frustrations have caught up with them. The trust they built over decades has been badly damaged. Many riders, even those who grew up dreaming of owning a Harley, are turning away. They don't want to get stuck in overpriced loans or be treated like they're walking wallets. And when that trust breaks, it's incredibly hard to earn back. Dealership closures are becoming more common, especially in smaller towns and rural areas. Without consistent foot traffic and with buyers now shopping online or avoiding new purchases altogether, keeping the lights on just isn't sustainable for some locations. Staff who've been with these dealerships for years are being laid off. Service departments are seeing fewer appointments. Even seasonal workers are being cut. It's not just a downturn, it's a full reset of the business model.
Ducati Panigale V2, which has had a ground-up redesign for 2025, including a...
Meanwhile, manufacturers like Indian, Ducati, and Kawasaki are watching all this closely, but they're playing it smarter. Indian, for example, has been a bit more flexible with pricing and more transparent with financing options. Ducati has leaned into quality over hype, building a loyal base that cares about performance more than flashy marketing. And Kawasaki? They've been nimble, offering value-packed bikes that appeal to younger riders who want performance without the premium sticker shock. These companies still feel the pressure, but they're not caught as deep in the same trap as Harley. It's also worth noting how differently these brands treat their customer base. While some Harley dealerships stuck to outdated selling tactics, like adding surprise dealer markups or pushing unnecessary upgrades, other brands have leaned into digital tools and better communication. That shift in approach is paying off. In today's market, honesty and respect go a long way. Riders talk, compare, and warn each other online. One bad experience can blow up across forums and social media in minutes. And in an industry built so much on word of mouth and lifestyle branding, that's a serious threat.
Can't do it. We can't compete. We can't make enough money, and they're closing down. So there's going to be fewer dealers. I think incentives are going to continue. Harley-Davidson is going to try to drive sales.
The long-term damage to Harley's reputation may be the hardest part to fix. The bikes themselves still have that iconic look and sound, but for many, the buying process has soured the whole experience. If dealerships can't win back trust, and if the company doesn't change how it connects with its customers, The brand might hold on to nostalgia, but lose the next generation. The motorcycle market has taken a serious hit, and now everyone's asking the same question: what comes next? After years of sky-high prices, overhyped branding, and dealership games, it's clear that something has to change. The old model just isn't working anymore. Dealerships can't move bikes, buyers don't trust them, and brands that used to feel untouchable, like Harley, are suddenly looking a lot less bulletproof. One big change we're likely to see is consolidation. A lot of smaller dealerships probably won't survive this crash. If you're a dealer sitting on unsold inventory with rising costs and no buyers, you're in trouble. Larger networks may absorb the survivors, or some locations will just shut down completely. It won't happen overnight, but the writing's on the wall. A leaner dealership landscape is coming. Prices will also need a serious reset. For years, the sticker prices on new motorcycles, especially Harleys, were bloated way beyond actual value. People paid top dollar, not just for a machine, but for the story dealers sold them. Freedom, heritage, lifestyle, but now that story doesn't hold up like it used to. Buyers are smarter. They've seen through the illusion. If brands want to stay in the game, they'll have to price bikes fairly, without stuffing every sale with hidden fees and sky-high financing. There's also talk about a shift toward direct-to-consumer sales. This wouldn't be surprising. Just look at what companies like Tesla have done in the auto industry. Cutting out the dealership middleman means more transparency and less markup. And that's exactly what today's riders are demanding. Some newer or more flexible brands might make that move first. Harley? It's hard to say. They're built on tradition, and tradition doesn't change fast. Can Harley actually bounce back from all this? Maybe, but only if they start listening. Riders want more than loud engines and chrome. They want honesty, value, and a real connection. If Harley keeps pushing overpriced models through tired old sales tactics, they'll lose more ground. But if they adapt, if they find a way to rebuild trust and offer something riders actually need, they could survive the storm. That's a big if, though.
Harley-Davidson Livewire electric motorcycle. Right off the bat, I can tell you two things. One, it's overpriced. And two,
Meanwhile, the door is wide open for other players. Alternative brands like Royal Enfield, Triumph, and even smaller startups are already gaining ground by focusing on affordable, reliable bikes without the dealership drama. And then there's the rise of electric motorcycles. For a long time, electric bikes were seen as futuristic toys. Not anymore. As tech improves and gas prices remain unpredictable, electric motorcycles are starting to look like a smart choice. Brands like Zero and Livewire are carving out space, and they're attracting a younger, tech-savvy audience that traditional companies have struggled to reach.
Is the market crashing? I don't know that it's crashing, but it's certainly coming back down to a reality base. If you think about the 2020...
What's clear is that the crash has forced a reset. It's a chance for the industry to rethink how it treats customers and what it stands for. Will the big names adapt? Will new brands rise? One thing's for sure. The riders aren't waiting, they're already moving on, and the companies that don't catch up, they'll be left in the dust. So, what are your thoughts on this? Let us know in the comments below.